In a world of economic uncertainty and unpredictability, Jim Rogers is a financial expert and investor who has been successful in navigating the changing tides of the financial market. In a recent video, Rogers discusses the assets that he recommends investing in during an economic downturn. As a financial analyst and investor with a net worth of $300 million, Jim Rogers' financial insights are valuable and worth considering. Rogers warns of the dangers of printing money and how it leads to inflation, which can ultimately cause the collapse of a currency. He cites historical evidence that no nation has ever stayed on top forever, with most countries declining after a peak of success that lasts for 100 to 200 years. Rogers believes that the U.S., currently the largest debtor nation in the world, may not be immune to this pattern of decline. He cautions against the tendency of people to ignore the lessons of history, and instead encourages people to understand and exploit history for their own financial benefit. By recognizing patterns in the financial market, one can make informed investment decisions and protect themselves from the effects of inflation. Rogers advises investors to invest in two types of assets that will protect their wealth in the event of a currency collapse: real assets and commodities. Real assets include things like gold, silver, and other precious metals, as well as real estate and other tangible assets. These assets are considered real because they have intrinsic value, unlike paper currency that can be printed at will. Commodities, on the other hand, are goods that have value and are traded in markets. Examples of commodities include oil, wheat, and sugar. Investing in commodities can be a way to hedge against inflation, as the prices of commodities tend to rise when the value of a currency declines. Rogers warns that in times of economic uncertainty, many people tend to invest in financial assets, such as stocks and bonds, that are often overpriced and vulnerable to market fluctuations. Real assets and commodities, on the other hand, tend to hold their value better in times of economic turmoil. Despite his advice to invest in real assets and commodities, Rogers acknowledges that there are risks associated with any investment. He advises people to do their own research and not to rely solely on the advice of financial experts. He also warns against investing in assets that are in a bubble, meaning that they are overpriced and likely to crash. Rogers' financial advice is informed by his extensive experience in the financial market. He has worked for George Soros and co-founded the Quantum Fund, a successful investment fund. Rogers' experience has taught him the importance of being able to recognize patterns in the financial market and to make informed investment decisions based on that understanding. In conclusion, Jim Rogers advises investors to invest in real assets and commodities as a way to protect their wealth in the event of a currency collapse. He cautions against the dangers of printing money and the risks associated with investing in overpriced financial assets. By understanding the lessons of history and recognizing patterns in the financial market, investors can make informed decisions and protect themselves from the effects of inflation. If you found this video helpful, don't forget to hit that subscribe button and turn on notifications so you never miss an update from our channel. By subscribing, you'll have access to all our latest tips and tricks for achieving financial success. So what are you waiting for? Click that button now and join our community.